Right. Welcome to Markets Now. I'm Michelle Rook along with Mark Schultz with Northstar Commodity. And we are seeing mixed prices in both grain and livestock futures trade. And let's start off with the wheat market, Mark, because we've had a nice run there today. What's pushing that? Is this some, weather concerns in spring wheat? That's understandable, but what's pushing KC wheat?
Yeah, I think maybe just a little bit of a combination. Now, first of all, you sold it down significantly. And the wheat, if you go back to the crop report, wasn't exactly terribly bearish. We just had a bearish response in price wise. So maybe we get back into where we got into a little bit of short covering off of it. The weather does look like the rains track further south over the next 7 to 10 days, which would be favor more of your Kansas, Missouri, and the Delta. So that may slow down your harvest of the winter wheat. And then it's a little drier up into your spring wheat areas. And of course, we had crop ratings out. They showed a little bit of a decline there for the spring wheat. So a little bit of uncertainty on that. And then I'm also talking about potential of intense heat returning back to the Northwest and up into Canada. And then I think I've heard a little bit of rumbling of dryness issues, which may have affected the Russian spring wheat crop a little bit more. And also the fact that some of the early yield reports coming out of the winter wheat out of Russia, not quite as good as what they were expecting.
Well, some double-digit gains there, but it doesn't seem to be spilling over to help the corn market. In fact, we've actually made some new lows for the move again today, haven't we?
Yeah, we have. The corn, I think, has now become replacing the wheat as the whipping post for the markets. Any way you cut it, the report across the board on when we found 2 million more acres of corn certainly put a major dent into the corn market and into the bulls for the time being. Because you're going to sit here now anywhere from a 2.15 to 2.25 carryout. Neither one of them make any difference. You're going to still go, corn is too high, over $5 a bushel. It's too high. So we're going to have to see something that changes on that perspective here, or we're going to have to wait it all the way on out. And weather-wise, you put some rain down in areas. I would still say we're short subsoil moisture in a pretty large geographical area, but we just don't have any hot temperatures either. So this is probably the issue with the corn, is that there's just nothing on the weather front to help us out. And that's probably needed if we're going to turn the market to the upside. If we close these corn below 390 or 490, excuse me, it starts becoming on the negative tone on the technical side.
All right, but the debate rages on about yield. How much yield loss do you think we've seen, and how much would we need to get this ending stocks number below 2 billion even?
You're probably going to have to see a national corn yield go back below 175, 174 to start giving you at least a neutral stance, probably 172 or lower to start giving you something back more of $5, $5.50 plus D corn. You're probably going to have to see something going into that camp in there. That, or else get a shocker that hot, dry weather in China pulls down their production or something of that nature is what's going to have to happen. So I think we got a lot of work cut out for us on the corn market.
Soybeans just a little bit higher on the day, but I've been a little disappointed with the fact that we've not been able to get the Novi beans back above the $14 mark, even with 4 million acres less production on the books.
Yeah, I think if you go back into that report, it's probably not as a big of a shock that we found 2 million more acres of corn. Didn't want to see that, but the bigger shock is that we had 4 million less acres of soybeans. So any way you cut it, just doing the easy, simple, quick math, you're going to be 150 million bushels or lower. And I doubt USDA is going to give you anything below 100 million, which is probably where we're at on the projected carryout. So we're going to have, the market's going to have to set its tone of what it wants to ration out the demand as it moves forward. $14 is a very tough resistance area on the November beans, and even that 12, I believe it's 1260 on the 24 beans, also a major roadblock for that market or that contract as well in here. The other one that just kind of keeps the beans somewhat in check is the beans are being led by soybean oil. Not the meal. If you have the meal, would have to start participating to the upside. And that's probably going to be a little difficult to do.
Yeah. What about this cattle market? New contract highs in the feeders are all-time highs in some of these months, and we did score live cattle futures into contract highs on Monday. We're setting back here a little bit, but it just feels like every break kind of gets bought here, doesn't it?
Yeah, it sure does, and it's. I think the at least the most encouraging part to me is that we did have this daily key reversal that was posted back on June 7th on the charts for cattle, and last week we managed to on Friday to take that out,
You bet.
so that it does. I don't have to look at that chart signal all the time, going, "Boy, this doesn't look good on the technical side." Uh, that's it improved. We've had, some of our best demand period is typically the month of May and comes in the month of June, and then we start to fizzle just a little bit on the demand side after the 4th of July in here. So we'll see what happens with beef prices. The grocery stores have, quite frankly, have kept the beef price in check. Haven't seen it go up very much. We'll see if that changes now after the 4th in here. And I still think that's probably the bigger key is, can we keep the demand as strong domestically as strong as we have in the first half of this calendar year, or do we lose some of that over to pork and poultry?
You bet. So we've had 3 down weeks in cash. What do you think in this week? I know we have some formula supplies the packers could get into, but it sounds like they're short bought. So will that give the feedlots a little leverage?
They have, the Packers got some profit margins in here, so I think he's a little short bought, and I think we're probably going to see a steady to firmer cash market. If it fails and we have cash get weaker, that's what'll be changed a little bit on the market. The other thing with the cattle market too is just the alignment. Keep in mind, we've in the last 2 months, three, its futures have been this, or cash has been this huge premium to the futures market, and as long as the
Right.
cash didn't go down, they pulled the futures up. But that gap has narrowed dramatically now, and therefore, in order to move the cattle market higher on the futures end of it, you're going to have to see a steady, firmer cash market.
Hog market making new highs for the move again here today, and we have had quite a run off the contract lows. So, what is pushing it right now? I know we got some pent up buying demand there, kind of circulating before Prop 12 went into effect, but what's moving it now?
Well, I think here too is we've started to see a better. The demand has been good in the export business. It has been, imports have been down. They're down like 24% year to date versus a year ago. The pork exports up 8 to 9% above a year ago. So that's all been doing fine. Hog weights have been now, instead of being equal with, they've been now running 3 to 4 pounds lighter. Sow slaughter has picked up the last 5 weeks, running anywhere from 3 to 11% above a year ago. You want to keep that in check. And I think the one thing that started to change here too is the alignment of the market. And the alignment had been that the futures had a huge premium to the cash market. Now the cash has turned around in the last 30 days. You've started seeing cash hogs going in the low to mid 90s, and the pork cutout has been coming up. And the pork cutout has been held in check simply because, or had been simply because you had ribs and bellies way undervalued what they normally do. They still got a little bit more room to go to the upside. So hopefully, if those two can should pull the cutouts up a little bit more, and we still have a good seasonals to peak somewhere in this late July, August, early August time period.
All right, let's hope we have a little more upside so we can put some profit back into this business. All right, thanks for joining us, Mark Schultz with Northstar Commodity. That is Markets Now.